All right, today we're going to do something a little different. We're taking a real dense technical analysis report and we're going to break it down. The company, UPS, a name we all know, and we're going to treat this whole thing like a doctor's visit, giving the stock a full health checkup. You ever find yourself looking at a stock and just wondering, is it healthy or is it, kind of sick? Is it running a fever or is it in peak condition? Well, that's exactly the question traders try to answer with technical analysis. They're basically looking at the stock's medical chart. And really, at its core, that's all this is. Technical analysis kind of ignores all the big company stuff, the earnings, the revenue, and it just focuses purely on the chart. It's all about reading the vital signs, things like price and volume, to figure out what's going on right now and maybe, just maybe, guess where it's headed next. Okay, let's get into it. All right, first things first, we've got our patient, UPS, in the examination room. Let's get it on the scale and check the absolute basics. So the first vital sign we look at is the price. And according to this report, UPS is trading at $95.67. But, a number like that, it's pretty meaningless on its own. It needs context. And here's that context. We're looking at where that price fits into the bigger picture of the last year. So UPS has been all the way down at $82 and all the way up near $139. So at $95, yeah, it's way closer to its low for the year than its high. It's kind of like knowing a patient's weight has bounced between 170 and 250 pounds. Suddenly, you know where they stand. Context is everything. Okay, so let's zoom in on what's happening right now. The report points out two really important levels. There's a support level, think of that as the floor, at 94.36. And then there's a resistance level, the ceiling, at 96.39. What does that mean? It means the stock is stuck in this super tight range, just bouncing between the floor and the ceiling. If it breaks through that ceiling, that's a good sign, a sign of strength. But if it falls through the floor, well, that's a sign of weakness. So, we've got the basic vitals down. Now it's time to check the patient's energy. How much momentum does this stock actually have? Is it sprinting ahead, or is it kind of getting winded? And one of the go-to tools for this is something called the Relative Strength Index, or RSI for short. The easiest way to think about it, it's the stock's pulse. It tells us how fast the price has been moving and by how much. It's a great clue to see if the stock is maybe running a little too hot or getting a bit too cold. And the scale here is pretty straightforward. If you see a reading over 70, that's like a really high heart rate during a sprint. The stock might be overbought, a little overexerted. And if it's below 30, that's like a slow, weak pulse. It might be oversold, maybe beaten down, and getting ready for a rebound. That sweet spot is right there in the middle. So for UPS, this report gives us a 14-day RSI of 58.27. So what does that tell us about our patient's pulse? Well, it's pretty much in neutral territory. Not too hot, not too cold. The pulse is steady. It's not overbought. It's not oversold. Everything seems balanced, at least for now. But you know what? Let's get a second opinion on this momentum. Okay, for our second opinion, we're looking at an indicator called the MACD. Now, don't worry about all the numbers. Just focus on the story they tell. The MACD line, think of that as the fast line, showing recent momentum, is at 1.22. The signal line, the slower one, is at 1.48. So the fast line is below the slow line. It's like a runner whose current pace has just dropped below their average pace for the race. It's a sign that momentum is actually weakening. The patient isn't sick, but they're definitely showing signs of getting a little tired. All right, so let's zoom out and see how all of this fits into the bigger picture. Because a stock's health isn't just about what's happening today. We've got to look at both its short-term and its long-term condition. And this is where things get really interesting. And honestly, a little tricky, because a stock can tell two completely different stories at the same time. Just like a person can feel great today, even if they have some long-term health issue, a stock can look really healthy in the short term, even while its long-term trend is looking pretty concerning. Or, it could be the other way around. And this chart here shows that tug of war perfectly. So on the left, you've got the short-term health. The current price, $95.67, is above its 20-day average. That's a bullish sign. It's positive. The patient is feeling good this week. But then you look over on the right at the long-term health, and the story flips. That same price is below its 200-day average, and that's a bearish or negative sign. It's telling us that the underlying long-term trend is still kind of weak. Okay, so we've checked the vitals, we've measured the momentum, we've looked at the short and the long-term trends. It's time to put it all together and come up with the analyst's final diagnosis. What does all this mean? So here's the summary of symptoms right on the patient's chart.
First, the price is stuck in that tight little range between support and resistance. Second, the momentum is neutral, but that MACD told us it's been fading lately. And then there's the big one. We've got this conflict between a positive short-term trend and a negative long-term trend. It's a really mixed bag of symptoms, isn't it? So, this report takes all of that, all those conflicting signals, and boils it down to one single number. A final technical score of 19.83. And on this analyst scale, that's a pretty low score. It really reflects all that weakness and all that conflict we just walked through. So what we have here is a diagnosis of the stock's health for right now. It's not in critical condition, not by a long shot, but there are definite signs of weakness, especially when you look at that long-term trend. So this analysis, it gives us the what. But the real question for any investor is the prognosis. What happens next? And that, as always, is the billion-dollar question.